Hello, this is David DT, Trading-to-Win.com. The topic of tonight's conversation will be Elliott wave application as seen by the mark. I'm going to be talking about D Wave. We're looking at a weekly chart of S&P 500 index. As you can see, two major tops where termination of major wave up, W5 completed here in October of 2007. If we zoom in, we're going to see that better. October, W1, 2, W5 ended, major up ended, corrective wave up, corrective wave down ended, when everyone was expecting rebounds, but then major collapse came in, created V bottom. So as of right now, we most likely in major down, and we're about to complete W4 up corrective, and we're going to go into W5 down, which might be the longest and not the steepest but the longest. And why I believe that we're still in down wave, because looking at RSI, it never crossed 60 on weekly scale, so possible beginning of major up, W1, for now can be dismissed. Let's drill down and look at daily chart. Daily chart shows slightly more optimistic picture. As you can see, wave down started at the same time, October 2007, but as we can see, it might have probably completed on March of this year, and we're now in wave down corrective WA. Let's zoom in. If we zoom in, we're going to see that we're now in major down WA, or there is another possibility that we started major up W1, and the funny part is both of them has just satisfied minimum requirements to be qualified. It's not much higher than 60 on RSI, but still I would not dismiss possibility that this is the ultimate bottom for now, and we're moving up unless proven otherwise. This is still kind of in the air what's going on. One thing is clear, we're going to see corrective move down, normally in what flavor of wave we are right now. We're either going to see WB or we're going to see W1. Both are down and both telling us the same story, we're facing strong move down. Now we're looking at an hourly chart, and the picture is a little bit glimmer. And we see that W5 up ended, and we're now in corrective cycle, and we're probably facing another wave down right now, because no matter what cycle we are, minimum requirement for both versions has been completed. And the only problem is we did not retrace nearly as much as we could. We could retrace up to 76.4%, but that's an hourly chart. No one knows the time requirement, at least on the top, wasn't met precisely. Here it's still in the development. Now we're looking at 30-minute chart. And as you can see, different time frames are really contradicting, starting from daily and down, and I'm not really surprised to see that, because this is like the major indecision area for the market right now. So we can be painting different pictures for a while, but anyhow, on 30 minutes time frame, we see that wave up down completed, met target 76.40% exactly, and started obviously W5, which has not been qualified yet. It's just a possibility. If it's going to fail, we can safely dismiss entire wave up. Then it's going to be in sync with what we see with hourly chart, weekly chart, and probably daily chart as well. As of right now, another version of wave down started. W2 completed minimum requirements, and we might presume that W3 down is in progress. We will see tomorrow. Now that's the last chart for today, 10 minutes. As we can see, major down completed from the top on Monday, and we either are in corrective waves or we started wave up, which not going to exist for much longer. We're probably going to go tomorrow somewhere to this area, 27, 30 maybe, which honestly I doubt that we will. Most likely it's going to be somewhere 24. That's coming off my different set of charts, which I'm not going to talk about today. Anyhow, that's going to be it for today. Good night, trade well, David E.T., Trading-to-Win.com.